Begin your path to financial freedom. Gain up to a $7,000 bonus on us. Register and use promo code. Deposit and enjoy a 7% bonus. Available now. Link in the description.
What's up, guys? Welcome to the Crypto Savvy channel. I'm Craig, and let's get into the charts. The CPI data came out today, a little bit hot, not too much more than expected, but nevertheless, it came out higher than expected. As you guys know, I'm not huge on news. I think news is noise. I think just looking at the charts has made me financially free without paying attention to the news or any of that. Usually when the news comes out, the play is or the move has already happened, and a lot of that has to do with big boys, big money. They know this stuff before it comes out, right? And a lot of this stuff is just false numbers anyway. The money is in the markets. The people running the markets know how to take the money. So remember that. Let's get into the charts, and yeah, make sure you guys smash that thumbs up. Leave your comments down below. Let me know what you think of the video. Let's get into it. So the DXY, I think the DXY is real close to a breakout here. If we do break to the upside, I have two targets here. We've been watching this for a while. So if we do continue up around the 105.5 to 106 range is the first target. The second target being, looking at this as a flagpole, this being the bull flag, going all the way up to, we have this resistance right here about 106.8 to 106.5, somewhere in there. If we do get above this and this holds as support, obviously we have much, much higher targets. As you guys know, I've been bullish on the DXY for a long time, and I do think the biggest money grab in history is coming soon in all markets. I think they are going to come down hard and fast, and that will be a huge opportunity to get in. Now, if it happens like I'm thinking, it's going to be a long, slow recovery. But if you get it at the bottom, you make money forever. A lot of these people that are already in way up here at the top, it'll be a long time before they even break even. If I'm correct, none of this is financial advice, of course, but I think the biggest opportunity of our lifetimes is coming, along with the biggest money grab in history. Just don't let them grab yours. All right, let's take a look at what's happening. So where is the resistance we're looking for in the DXY right now is around right here, 104.9, 105. If we do come and break down past this, let's say somewhere in the 104.2 range, then we have a low target down here to around 103.6. Now, obviously, if that happens, then you could be temporarily short-term bullish on Bitcoin and the markets. But if not, otherwise, we break up this way, everything's going to come definitely be heading to the downside. So just remember that. Let's take a look at a few more things. We're going to go into just the EMAs today. If you want to know my total view on the markets, every Monday we go over all the, NASDAQ, S&P, all that stuff. Today we're going to go over Bitcoin, Ethereum, Litecoin, XRP, and BNB as usual. But I do want to show you guys just looking at the EMAs, and we'll also take a look at the Fibonacci retracement levels, right? And just see how this is lining all up. So before we do, make sure you guys check out Prime XBT. Links down below. Use my promo code Savvy50 to get up to a $7,000 bonus. Savvy25 get you 25% off your fees. Once you do sign up, you can do the copy trading, or there is a contest section that costs you nothing to join, and you can actually win free tradable funds if you win the contest. So let's look at the EMAs here on the 1 hour, right? So on the 1 hour, you have the 55 EMA right here, right? Usually when the 8, the 13, the 8 is the red, white is the 13, 21 is the blue. When these cross, it's usually bullish right after the cross. If you guys know my EMA strategy, once it crosses the next candle, as long as it opens and closes below or above the red EMA, right? If it's going to the downside below the red EMA, which is the 8 EMA, then it's bullish. Right there, we got our bullish move, right? Now we're coming back down. Now it has to hold above the 8 EMA, which right now is the 26.1. If it starts breaking down here, your next support is going to be this 25.8. Now this is the 1 hour. You guys know I like the 4 hour and up, but I'm just showing you on the EMAs here. Let's go into the 4 hour. What's the 4 hour showing? So the 4-hour is looking like it may want to cross here, but you can see what happened last time, right? Last time it did that here, it did not cross. So technically speaking, if this, so we probably got about 8 hours left. If this blue 21 EMA now crosses the 55 and the following candle, right? That would have to be the next candle, the next candle that would cross. So in the next 4 hours, if that crosses and you stay above the 8 EMA for the next open and close, so probably 8 hours from now, if you're above that 8 EMA, you may get one more spike up. Now your next point of resistance is 2670. We also have another point of resistance once we go to the daily and look at it that way, right? So the daily, as you can see, right, when we had the 8, 13, and 25 EMA cross over the 55, right, and the next candle opened and closed below, right here, below the 8 EMA, you got this huge drop. This is the daily now, remember. But once you had this drop, you came back up and retested that 55 EMA before continuing down. So if that was to happen again, right here is our major resistance. There's two levels, right? There's the 200 EMA at 27,000, and then we have the 27,200 range, right? Which also lines up with the high volume nodes here. So if we do get a spike up in the markets and Bitcoin does rally, I don't see it getting any higher than 27.3, right in that range, right? You could also draw a trend line right here on the daily, would get you about the same thing, right? Actually, that trend line would get you as high as 27.8, but let's do this. Go off of these 2 wicks here, bring it down. So that lines up perfectly with that 27.2, 27.3 range. If this does get a bounce up and gets above that, then we could be bullish, and then the dollar would probably be going down. But nevertheless, that doesn't change my big view on the macro, which is to the downside. I do think the bottom is coming sometime this or next month. Let's look at the 2-day EMAs. You had the 2-day EMA cross right here, open and close below, signifying sell signal, but you got that rally up right to that 55 EMA. Let's check the 3-day. Looking at the 3-day. So on the 3-day, we have 2 days left, right? So if this crosses in 2 days, then we have 3 days to open and close below the 8 EMA, which is right here. If that happens, much more downside. Now what could possibly happen is come back up for one more retest of this 55 EMA, and look at that, it's around 27.2. So if we do get any type of rally, I'd be looking, if you're already in shorts, to add to your shorts around, let me rephrase that. I will be adding to my shorts if we get up to 27.2 to 27.3 range, right? For a much more downside. As you guys know, I've laddered into shorts. I started up here at the 31.4, and I've laddered in a few more along the way. That meaning when you get a bounce after you're already in profit and you get to a resistance level, add in a little more shorts. Guys, don't use super high leverage. It doesn't leave you enough room. Always protect your capital. That is the main thing in trading. Let's take a look at this 4-hour, and then we'll go into the daily again real quick, and then I'll go into Binance, XRP, Ethereum, and Litecoin. Make sure you guys take a second out, smash those thumbs up, let YouTube know that you're watching the videos, share them, get them out there. It does help the algorithm, and I do appreciate it. Another way to help the algorithm is to leave your comments below. All right, so I will be on another show today. I'm not going to say what show, see if you guys can find it. And anyways, so here are the fib levels we've been watching, right? Let's actually, this should be up a little higher. Oh, I got that locked. Let me unlock it. Get up a little bit higher. There we go. Lock it again. So what we've been doing is bouncing off this 0.382 fib off the retracement, right? And the retracement level is from right here, this low, up to this high. Make sure that's right. Sorry about that. I'm trying to make sure these lines are correct, and that one is not. Unlock it again. put it up to here. There we go. We lock that. All right, so looking at the 4 hour, we are getting our support at the 382. Next major resistance could be all the way up to 27.9, which is the 0.236 retracement level. But nevertheless, I don't believe we're going to be seeing that. We're probably going to keep getting rejected here. Once we break this 25.6 range again, our next level of support obviously would be this low. You might get a little bounce here at 24.6. Maybe come up, retest that 25.5 before continuing down. Your next support level on the fibs is 23.650, right? So expect a possible bounce there. It doesn't have to. You can see the EMAs are often support and resistance, but sometimes you blow through, right? But look for some resistance here at 23.6. Then we have this trend line right here coming off of these wicks at around 22.5. That's where I would expect another bounce. We could get anywhere in this range, right? Let me put let's just say somewhere in this range, because this would be going off this low here and all the way down. But if we do break this 22.4 level, I don't think you're going to see a whole lot. As long as it breaks through, I don't think you're going to see a lot of upside. I think you might see a little bounce here for a little bit and then come through. Then we have the 0.618 between 20. This is golden pocket zone between 21.2 and 21.7, right? Maybe get a bounce there, come back up, retest this trend line before continuing much, much lower. We have the 0.786 at 18.97. And then, of course, we have our low over here at 15.5. If that breaks, guys, you know my thoughts. I think our bottom could be anywhere between 35 and 9,700 by the end of this year. Still thinking that. Now let's take a look at the daily here and just looking at this rising broadening wedge, which we broke down from, came back to retest, and now we're continuing down. The measured move off of that is approximately around 10,500. But you guys know these targets I've had here forever. About 2 years, right? This 25, we nailed it. Came back, it acted as resistance. Once we broke up, now it's acting as support. I do believe once we lose that 25 again, it will become resistance. And then we be looking for that 15.6, our old low. This 15.6 target I also had from way up here. That was just measured moves, guys. I've just left them there. But here are my targets, 97 and 36. This is just a high volume node right here. If I throw the VPVR on there, I don't have it on this chart right now. I don't know what happened, but anyway, that's a VPVR or VRVP range right there. But so 35 to 9,700 is still where I'm looking for, and I'll show you why here in a minute. But first, let's look at Binance. Binance is in deep trouble. I've been talking about this. Once we break this 2202 level, and this chart is also very old, guys. This is where I started talking about it back in November when FTT collapsed, right? When FTX collapsed, the FTT coin. So watch out. It's making the same pattern, which it is. Told you once we broke 239, I believe this is going to come into fruition. Now, the best case is that 67 holds for Binance. If that breaks, guys, Binance is done, in my opinion. XRP, you guys know my thoughts on XRP. Much, much lower to go. Best case is 25 to 30 cents. Worst case being 4 cents. Ethereum, this is the area we're watching to break here, 1436. If that breaks, then we're next support zone is going to be around 1200, and if that breaks, 926. We also have a level, and I'm going to put that in, and I'll show you why. This measured move here, right there, about 629-ish, and that's just a measured move of this white and yellow rising broadening wedge, right, from the highest point. Actually, we can make that lower. Let's do that. That would be approximately $600 right in there. But of course, we have to break through the higher ones first. Litecoin, we broke through this 62 range. I told you once we did that, watch for this high volume node at around $50. Once 50 bucks breaks, look for around 23 to 25. If that breaks, 1570. If that breaks, adios. All right, bubble pop patterns. I've talked about this for a long time, and this is why I don't think the 4-year cycle is going to be a new all-time high every 4 years, right? I'm not saying it can't still be a cycle, because 4-year cycle isn't a lot of stuff. But so you can see, after a true bubble pop, it takes a very long time, years, decades, to return to all-time highs. So that's what I'm saying about the biggest money grab in history, right? If this happens and you get in anywhere in these levels, you don't have to catch the exact bottom. But if you're in way up here, it's probably going to be a long time before you see that money again. So that's why I don't like the dollar cost averaging strategy. You can dollar cost average in here all you want. Say you bought 1 Bitcoin, right, over this period of time, but you paid for that 1 Bitcoin, you could get 10 or 20 Bitcoin down in these levels, right? So every time a bubble pops, right, like this, it comes back down to where it began. And where it began was right in here. That's what I'm looking for still. It's all in the charts. It is about patterns, guys. It is about structure. Markets often react and act the same. It doesn't matter what the asset, what anything. It's all based on human emotion, right? So just like you can see here, false bottom right here. We talked about getting a false bottom, and this was our false bottom. Getting 100% rally and then continuing down to the true bottom. Still waiting on the true bottom here, guys. Same you can see here in Sony. You had a few false bottoms, but nevertheless came back to where the bubble began. But it's been over 20 years, and Sony nor Nintendo has reached its all-time highs again. Guys, when bubbles pop, it don't mean assets die. It's just how markets work to clean it out. And there's a lot of scams in crypto, a lot of garbage coins, a lot of garbage projects, a lot of garbage that needs washed out. And that's what bubble pops are for. They wash out all the garbage, scammy exchanges, scammy coins, scammy everything. Thanks for watching. Don't forget, smash the likes. I'll see you in the next video. Appreciate each and every one of you guys. You can click this Crypto Savvy logo right here. That will get you subscribed to the channel so you don't miss my videos. Make sure you tick the notification bells, and I will see you in the next one. Also, check the links down below. There's a free Discord and a bunch of other stuff down there. Take it easy, guys.